I'm here with Mariagiovanna Guatteri, who leads Swiss Re's investor cat bond offering, to talk a little bit more about the cat bond or catastrophe bond industry. So, Mariagiovanna, I think you have more than 20 years experience in the market. So I'm wondering if we can focus in particular on the last few years, and you could tell me a little bit about how the market's performed.
Yes, so the cat bond industry has grown tremendously over the past few years, fueled by both demand and supply, of course. And not only the growth has been exceptional over the past few years, but also the performance. We have seen returns very attractive compared to other asset classes, both in the terms of relative value, absolute return, and volatility as well.
And why has the market grown by so much? What's fueling that growth? Is it new investors coming to the market, or is it existing investors adding to their allocation?
Yeah, it's really demand and supply dynamics, as I mentioned. So the demand from a point of view of risk-taking has been very strong. Investors, both new and existing investors, have grown or increased their allocations. They appreciate and they understand the benefits of diversification, given the lack of correlation with other asset classes. And that's, on the other hand, of course, has supported the increase in demand for risk transfer by sponsors. And that's why we have witnessed this incredible growth over the past few years.
And now I'd like to look ahead a little bit. What for you is the outlook for the cat bond market over the next few years?
Yes, our outlook is optimistic in terms of growth. We see the demand for transferring this peak insured risk to stay. The exposure value, inflation, or concentration of risk in highly exposed areas is growing, is here to stay. And that from what we see, we hear from investor, the interest from investor is still strong. So as long as you have the supply-demand balance or that good dynamics, the market is set for growth. And not only that, with the growth of the market also comes a growth of further diversification of the market, because we see many new sponsors accessing the market for the risk transfer needs, and that will make the market more and more resilient.
And of course, a big topic is the rising natcat losses. Is that something that investors should be concerned about?
Absolutely, that's the risk they're taking. They have to understand the risk they're taking. But on the other hand, as I said, if this asset class is based on risk knowledge, so that risk has to be well understood and well modeled. And if the risk is increasing, if the transfer risk is increasing, that will also come with increasing premiums, increasing spreads. So investors should be compensated for the increasing risk.
What is it that sets Swiss Re's cat bond offering apart from an investor point of view?
Yes, so there are many things that set us apart, but let me focus on two. One is my team is embedded in the broader Swiss Re group, so we can leverage all the Swiss Re capabilities in terms of risk knowledge, risk modeling, proprietary tools, underwriting expertise. And on top of that, Swiss Re has been a leader in the insurance-linked market since the beginning. And it plays a role as a sponsor, as an arranger, as an investor. So you can tell that this breadth and depth of knowledge of the market or of the risk provides an incredible advantage to investors.
And Mariagiovanna, how did you get to your current position? How did you come to be involved in the cat bond market?
So I started at Swiss Re as a cat modeler, and having said that, I knew about the cat bond market since the beginning. As already in graduate school, I heard of the cat bonds, and I was intrigued by this asset class that was as a financial instrument, but so much linked to science, to the science I was actually studying. And at Swiss Re, I got to, as a cat modeler, as Swiss Re, I was supporting also the insurance-linked security team, structuring and arranging bonds. And just by chance, it happened that one day I sat next to the head of the ILS trading desk at Swiss Re on a plane. And of course, I had 6 hours during the flight to talk to him about the cat bond market. That really, led me to the job I have now.
And I understand that over the years, you and your team have been researching and developing new knowledge in this area, and have actually come up with some patents. And I wondered if you could tell me about one of the patents that jumps out to you.
Yeah, we've been very active in innovation. So one of the patents, for example, was linked to a bond that was structured for Swiss Re. And the bond used an index that used a USGS product called Pager, which estimates the number of people affected by a given ground shaking intensity. So you can see that an index like this can be useful for bonds that are meant to cover, let's say, emergency responses from government following an earthquake.
Mariagiovanna, thank you very much for your time. That was a really interesting discussion.
Thank you, Luke.